Welcome to ES Midweek Update, your podcast for cyclical and volume analysis on ES, the S&P 500 mini futures contract. I'm Ian Cooper, a financial journalist, and I remind you that this podcast is generated by artificial intelligence that analyzes and reworks our pre-market live sessions from the YouTube channel Cycle Depth. Today, we also have expert market analyst and trader Clara Bennett from Cycle Depth. We remind you that the opinions and interpretations presented in this podcast are the result of an AI simulation and could contain errors. All references to price levels or market analysis should not be taken as trading or investment advice. Each week, we'll delve into market dynamics and the midweek prospects. Get ready to refine your trading strategy. Clara, let's start with your analysis of Monday, January 13th. What was the overall market sentiment and how were the main cycles positioning themselves on the ES contract? Any particularly interesting elements you were monitoring?
Certainly, Ryan. On Monday, the market was in a transitional phase, with the quarterly cycle showing signs of weakness after breaking the lows. However, a potential bounce was setting up, indicating a possible bottom around 57.50. At the same time, the annual cycle was still too high, implying a need for a larger correction. This situation required a careful eye on the short term to see if sellers could gain enough traction to push further down.
Delving deeper into the cyclical analysis from January 13th, which cycles were you monitoring closely, and in what stage were they? What were your expectations regarding the cyclical evolution in the following days?
On the 13th, the focus was on the quarterly and the 4-day cycles. The quarterly cycle had given a bullish signal, but the immediate break of the previous lows created some doubts about the validity of that long signal. It was important to observe the behavior of the 4-day cycle, since that could help better define the short-term direction. In general, we were expecting some rotation, but keeping the level of 5,950 in mind as a critical point to watch.
And shifting the focus from Monday to Tuesday and Wednesday, how did the cyclical analysis evolve? Were there any particular surprises or confirmations compared to your expectations?
From the 13th to the 15th, the most notable evolution was the attempt by the market to take out levels of resistance while in a long position. We saw that prices made several efforts to reach the 59.50 level, but the lack of volume ultimately led to a failure in that attempt, confirming the short-term bearish view. The market seemed to be trying to confirm those areas as resistance. On the cyclical side, the 16-day was finally giving a sign of bullish turn after several days, but, overall, the larger cycles were still pointing down. So I wanted to see price move in specific ways to consider going long.
Now let's talk about volumes. How did trading volumes behave during the 3 sessions? What were the key areas of activity and what did their distribution indicate?
Volumes on all 3 sessions were really interesting. Monday was characterized by decent volume in the initial trading hours, but we did not see any true commitment on the sellers to continue the bearish trend. Tuesday was a session driven by the release of the PPI, where volumes spiked at the moment of the news, then showing signs of distribution and absorption in key price areas, around 59.20 and 55. Then, on Wednesday, volumes were high at the start of the session after the release of the CPI. Overall, the distribution of volumes told us that sellers were active on the highs, but did not have enough traction for a continuation. The key areas were the highs, the lows, and around the central area.
Looking at the depth of market, DOM, were there any significant signals of accumulation or distribution during these sessions? How did the DOM impact the trading dynamics?
Unfortunately, during these sessions I did not focus directly on the DOM, as I was looking for key areas of price and volume behavior in conjunction with the cycles. However, based on experience, during these specific market conditions it is crucial to see the DOM showing absorption and accumulation around specific key levels. The areas where we noted an increase in volume should be correlated with patterns of accumulation from big players and with an increase in depth. In contrast, distribution should appear as an increase in order size in areas where prices are testing new highs. A detailed DOM analysis provides us with additional insights about the real forces that are driving price.
Based on what you saw during the 3 days, what adjustments or modifications did you make to your trading strategies? Were there any points where you changed your bias on the market?
The market's movements made me more cautious about going long. The failure to break out on Monday indicated weakness. The fact that Tuesday's price movement created a range, rather than a directional move, suggested the need to wait for the price to make a clear move. My plan was to use the areas of support and resistance to define my short-term bias and to make entries based on confirmed volume and cycle behavior. As such, I reduced any risk of potential loss and decided not to make aggressive moves. The goal was to trade the intraday setup, waiting for a new, more important trigger from the larger cycles.
Based on all of this, what are the key price areas to monitor in the coming hours and days? Are there any critical support or resistance levels to watch for?
The key areas to monitor with greater attention are the 5950 area as a key resistance to overcome for any recovery attempt, the level at 5920, where we saw some aggressive sell orders, and the areas around 5,800 and 5,750 as potential targets for any bearish continuation. Dynamic supports were tracked through the 4 and 2-day cycles. These levels will be crucial to indicate the direction of the market.
Considering the cyclical analysis and the time frames, do you have a specific projection in terms of time for any possible move? What key time-based triggers should we watch?
The key time frame to keep under review is the end of the month, since the annual cycle will make its move there. But I'm anticipating that the market will first find a low before attempting to break higher. I'm waiting for an M formation in the smaller cycles that will, as a consequence, generate an eventual M formation on the large cycles, pointing to a test of the lows. At the moment, the price seems to be doing its best to find that area. I don't have a clear timing, only that by the end of the month the market should have found a clearer direction.
In conclusion, what is your primary takeaway from these 3 days? What are your trading perspectives on the ES contract? Is there anything else you would like to add?
My advice for traders is to prioritize caution. We are in a complex market phase where the short-term cycle activity is not yet well aligned with larger cycle. It is important to manage the risk wisely and wait for clear patterns before committing to a direction. Use the tools that best suit your style of trading, be that the 4-day cycle, volume or DOM, and combine them to identify levels of interest, so you can wait for the best setups. For now, stay flexible, adapt to what the market will show, and don't overtrade.
Finally, Clara, what are your overall perspectives for ES for the remainder of the week, and do you have any specific trading recommendations for our listeners?
To conclude, the ES contract is currently testing levels of support and resistance where there are a lot of buy and sell orders. I'll be watching carefully the 5950 resistance level and will check for any signs of absorption at key supports. It is important to stay calm and not to jump into any position before having the right triggers from the price and volumes and to have proper stop levels. Remember that there are a few key news announcements scheduled this week, and these could change the market dynamics. My key takeaway, at this point, is be flexible, wait for the market to show its hand and operate with caution, in line with your trading strategy. That would be the wisest thing to do.
Well, that's all for this week. Thank you, Clara Bennett, for joining me, and goodbye to all of you for listening. See you next Wednesday.
Thank you and happy trading.
Thanks for listening to the podcast ES Midweek Update. Subscribe to the Cycle Depth channel to stay tuned for the next episodes and leave a comment. We remind you that the opinions expressed in this podcast are based on an AI simulation. They may not fully reflect market reality and should not be understood as financial advice. We'll be waiting for you next week.